Yo, what's up, guys? It's your boy Looney, and the market was all over the place today. We're going to look at VIX and exactly the kind of setups that I did today. Because with volatility, you could actually make money in any direction. And I'm going to show you how I did it with my positions like Mara, Oscar, and HIMS in just one day. But before we get into this video, I do want to give a quick shout out to the Discord. It is free to join. And then I also offer a premium membership that's $8 a month. And that gives you access to one-on-one coaching, trade callouts. I have an option selling course. I have giveaways and more. Check it out. All the links to that are in the description. So like I said, the market opened red today. And I decided to look at the VIX because VIX is a good indicator of where the market is. And when it first opened up at 9:30, it was at $19. And that told me that premiums were actually a little bit juicier, which is actually a perfect time to sell puts. And I'm going to show you some cash cleared puts that I did for Oscar and Mara. And let's do that right now. So the first one we're going to look at is, let's see which one we could do. Let's do the Mara one because I believe I opened this one earlier. And I opened this one today, gave this trade to my premium members in the Discord, but right now it is already up 18% or $8, and I was able to set up this trade. This trade was at perfect time, and I caught the dip, so to speak. I mean, there is a chance that Mara goes lower, but I caught that initial dip in the morning. And if we look at the morning, Mara was really deep in the red. It was down almost 2%, and I decided to sell a cash cleared put. So if you guys don't know how cash cleared put works, I get that premium $43 and I have to put up the collateral or cash to acquire these shares at the strike price. So the strike price is 13.5, and I'm perfectly fine owning Mara at 13.5. And with that, you need to own 100 shares with options. It's always 100 shares. And I already own Mara. I already own it at $16. So I want to get my cost basis down. So if it dips to $13, that's perfectly fine. I get to pick up shares at cheaper prices. I get paid premium to do that. Similarly, I did it with Oscar. Oscar is trading at a very similar price as well. And I did the same trade, the same setup. And if we go down to here and we go down to this 13.5 sell put, again, I'm collecting $45. And if you combine the two, it's close to $100 in just collecting premium and just getting that initial spike downwards. So if you look at this, when it first opened, it was deep in the red, down 3%. And I took this opportunity to sell a cash cleared put. Same setup, 13.5. If it drops to that, I'm perfectly okay with owning Oscar at 13.5. Now, let's say you didn't have the cash collateral to set up these sort of trades because you do need $1,300 or $1,350. And for some people, they don't have that. And you just want to simply buy shares. So I actually, at the dip, bought shares of HIMS because I didn't have the cash to set up a cash cleared put on HIMS. So I picked up some shares. It's a very simple strategy. When volatility spikes, I don't panic. I just use it as a chance to add names I believe in. So I added a few today. I'm still red, and I have 68 shares. Obviously, the goal, well, maybe not obvious, but the goal is to get 100 shares at least. So that's why I could actually do covered calls, which we're going to get into a minute. But if you scroll down here, I'm simply just buying the dip. I bought at $41, again, 41.5, around that $41. So I'm not shy to when the stock drops, so just keep buying that dip. Some might consider that a falling knife, but as long as you have conviction and long-term outlook on it, it's perfectly fine with me. I'm okay with owning HIMS at these price levels. Even if it goes further downwards, I'm totally fine picking up more shares for cheaper. Because you have to remember, you have to think of stocks as if you're shopping for them and you want those cheap prices. You want to get them on sale. So that's exactly what I'm doing with HIMS. And again, you don't need a big portfolio to simply buy shares. And if you don't want to even buy full shares, you could buy fractional. But I want those clean numbers, those even numbers. And that's what I did. So I bought a couple shares of HIMS. Now, later today, the market actually flipped. It basically ended flat or became flat, but it quickly changed direction. And because of this rip, I was able to sell a covered call. So again, let's look at Mara. And if we look at Mara, it spiked at 10 a.m. or later that day, and I took advantage of this spike. And I got notifications on so that when it hits a certain price point or a certain direction with the Bollinger Bands is when I get notified. And that's what happened. And I sold a covered call. This one, I didn't get as much premium because I wanted to be a little bit safer with interest rate cut coming up. And who knows what direction these stocks are heading. So I wanted to give that space really deep out of the money. And I only collected $29. But if Mara does jump to $21, I do get that share appreciation and I get that premium. So I don't think I'll be missing out too much if Mara goes past $21. So I'm able to get that income from the put I sold and also premium from the covered call. So both positions are actually up in the day. Even this covered call is up 13% or $4. So it's pretty interesting how these strategies you can combine in just one day and make money off both of them. And that's exactly what I'm doing. I'm being very strategic with when I'm choosing. I didn't make a lot of trades this week until today. Until I saw that volatility is when I struck. And I do pay attention to VIX a lot when it comes to making trades. And when it dipped again at this 10:30 mark is when I sold that covered call. So you can see I'm very strategic when I'm choosing these. I'm not rushing into trades. I'm being very patient. So that is the power of trading with volatility. If there's a red open, you could sell puts. If the stock rips, you could sell covered calls. And you could also add shares that you like on dips. No matter which direction the market moves, I am able to actually generate ways to make money. And that's how you stay consistent in any sort of market. Until next time.